All the investments are time tested. What is the difference between a new and a proven investment? How to maximize your returns? Our chief financial planner, Mr. Ramalingam, will enlighten on this. Ramalingam, could you please explain?
It's a time tested with a proven track record. Most of the times we get like offers like this is a very good new scheme available in the market, an IPO, initial public offer of LIC or many other companies, new fund offer from a mutual fund company, new NCD, new ULIP, new real estate developer launching a product. The moment we see something new, we feel it is fresh and it is a good investment opportunity. We interpret new this way. And also, new means like it is going to be open for a short period of time, limited units are available. Immediately, we have to go and book it. Otherwise, somebody else will book it. It is known as fear of missing out. That is why we generally interpret any new scheme as a new opportunity. It is not that way. Another way to look at a new is it is not fresh, it is not limited opportunity. New means not proven. New means no track record. Predominantly, people hype this as first to market. So immediately grab it. Otherwise, you will miss the opportunity. This is how people marketed crypto also. The time for conventional investments have gone. Now go for crypto and people have lost money. People try to associate, like early bird gets the worm with these kind of new opportunities. So if you want to be an early bird, like immediately go and invest in this new scheme before the offer ends. Why don't you go and book this flat there or plot or invest in ULIP because the deadline is coming. After this deadline, interest rate will revise, that the scheme will be closed, new scheme will not have the guaranteed return. All those gimmicks people will tell you, and they'll glorify you. Only if you sign up, you will become an early bird. Only thing what we don't understand is in these kind of traps, we are not actually early birds. We are actually early worms who gets eaten by the bird. So here, when we try to be an early bird, we fall into the trap early. It is difficult for us to come out. This has been proved time and again. In 1994, there was one mutual fund they have launched, Morgan Stanley Growth Fund. People assumed those days there was no regulation, there was less regulation for mutual funds. So people thought it's like a share IPO, once in a lifetime opportunity. Just for mutual fund application, people stand in like a queue for 2 kilometers, and people were those applications were also sold in the gray market. After you have bought it, before it opens, you can sell it in the gray market. They have sold it for 500 rupees higher premium in the gray market. But after 15 years, it became an average scheme giving you only 10% CAGR, when rest of the mutual fund industry could give you 15 to 20% rate of return. Just for 10% rate of return, is it worth to stand in a queue for 2 kilometers and buy the application in the gray market, and in the gray market buy the units for 500 rupees premium? Definitely no. But people have done it. In the year 2007 and 2008 beginning, Reliance Power came with an IPO. Again, it created a huge hype, right? When they launched it for 430 rupees. Subsequently, it was one of the highest subscribed IPO those times. Subsequently, market crashed. It couldn't recover back to 430 in its lifetime. The 430 rupees share price has come down to 13 rupees, 10 rupees, 15 rupees. It has become something like a penny stock today. So why people fall prey for these kind of things? Because it's an IPO from Reliance, so you will never get these kind of offer most of the times. Before the price discovery actually happened, they bought it and they suffered. Here the challenge is Reliance Power is a regulated scheme. Morgan Stanley is also a regulated scheme. The problem is there is no track record. There is no proven mechanism that this will be a successful scheme. So when you are after you have checked is it a regulated scheme, in the regulated basket, just pick up those products where you see a track record. Don't go for something where there is no track record. Don't go for it. Avoid investments which they market it as new schemes. which they market it as initial offer. Go for schemes which has got complete track record.
Thanks for your detailed answer.
If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.